Hello.
Hello. Yeah, I could see
Yeah.
Prashant.
Yeah.
Yeah. Shailendra, are you able to hear me? Smita, are you able to hear me?
Yes.
Shailendra, what about you? Hello.
Yeah, I can hear you.
Yeah. Who else is there in the call? Maybe nobody. Oh, Lakshmi is there. Okay.
Murugan.
Yes.
Yesterday I was trying to do some exchange processes, but
Okay.
I sent a mail to you. I was not able to do the goods issue. So did you get a chance to look at my mail?
Yeah, I had a chance to look at my mail, but I could not check in the system due to my other commitments. Which server you are trying to do that?
The same, the class server.
This server only, yeah?
Yeah. Yeah.
Okay. Okay, we will see that today. Don't worry. We will see it online itself. Okay.
Okay.
We'll do that. We will clear that today. Don't worry. I think after a long time we are catching up. I was totally last week. So many commitments. I think by this week. Let me see that. What is where we are standing? Yeah, we are today in the 24th session, RLM PRA JVA, and the RLM PRA JVA meant for 3 sessions, and then after RLM PRA JVA, the integration aspect 1 session. Yeah. So after after that, those 3 sessions will be the resume preparation and all those things. So what I suggest is, now after today 1, 2, 3, only 6 sessions are left out. What I suggest is if you are already having some resume with you, okay, so please start working on your resume part next 1 or 2 days, so that by the time we reach your 27th session you will be ready with some resume. I don't think that that will be your final resume, but we need to start somewhere. Okay, I think already you will be having at least some template with your existing experience, existing educational qualification, whatever it may be. You start off with that, and whatever you think you want to put in this as part of ISIL, whatever maybe, you start preparing. If you don't think anything regarding ISIL also, no problem. Start with some template. We go to take it up 1 by 1 resume, 3 of you, and then start discussing those 3 days exactly for that. And then in the 3 days we'll be discussing the team structure, project management, interview questions, how to handle everything. But before next 3 sessions, I want you to prepare some resume template. For how to prepare that resume template, existing resume you please keep ready. Once you keep ready that, tomorrow I will give you some tips on some sample resumes I will send to you. Then I will tell you some tips how to create how to see resumes from the internet for ISIL. Though based on that things, by 26th or 27th session, you should be having some template. I am again telling that will not be final resume for you. That will be a template for us to discuss. Then what you will do? You will have those 3 days. You will make some highest salary resume. Again, then what will happen after maybe after 10-15 days when you are searching for the job and all, you will come out with more inputs for the resume. So after that you will create that means after completing the course, maybe after when you are searching for the job, that time whatever you complete, you create, that will be your final resume for maybe after attending 1 or 2 calls something, that will you will get your final resume. So that will you start using for your interview purpose. So that is what the plan for completing the course. So today I will start off with RLM, PRA, JVA. So,
Murugan,
yes.
in TSW, we haven't covered that slide deck on what is it? Movements, the movement scenarios. So the last class,
TSW. Right. Okay.
The last class we just saw the existing. In fact, we haven't even created a nomination and a ticket.
Okay. See, actually TSW is concerned that data what we created, na, that data need to be set up. Still more some settings are there. So what I will do, I will set up the data in the background. Okay. So then tomorrow we will complete that part. That way we will plan. Because if I start doing that online, then it will be a because I will be checking certain things which actually just it will be a time consuming process. So I need to check up the data. I think I mailed a couple of times also. So many commitments I could not check up that data. What you told is right. That data is having some inconsistencies what we created. So we need to create a nomination. Right, for that the data need to be made it perfect. I will check up what is wrong, and what is wrong also I will tell you what went wrong. Then we will create that cycle tomorrow and complete that. Yeah, thanks for reminding, Prasad. Yeah.
So before we go to the next phase, do you want to look at my mail on the exchanges thing?
Yeah, exchanges thing I will certainly eager to look it up. I saw already the mail. So what I will do is, as we seen the other day, today Sumita also is there. I don't know whether she will be able to hold up for more than 1 hour here. So what we will do as we did last time, so we will complete today's session, and whoever wants to join to see the mail, they can be online and we can complete that one also today.
Okay.
That way it will be better. So that if somebody wants to leave, after completing a session, they can leave. Yeah, that is the idea. I don't say that let them not join. They are free to join, but due to some reason, if they want to leave also, they can leave that time. Yeah.
I don't think we have received the materials for RLM and all.
Okay, that also I will send it nowadays. I will send it now. Yeah. RLM stands for Remote Logistics Management. PRA stands for Production Revenue Accounting. JVA stands for Joint Venture Accounting. Your company, what you are working, it is in the upstream side, Prasad?
No, it's an integrated. It's upstream, downstream, everything.
Okay. Basically, these three topics are basically upstream related topics, the exploration and crude oil related part. And we will be, as part of our course, we will be discussing the theoretical and the conceptual aspects of these topics. We will not be doing too much into the system. The basic reason why we are not able to do in the system is our course is fine tuned more towards the downstream, and also these topics are more into accounting in nature rather than logistical processes. How to account the things, debit, credit, how to post the cost center and all those things. So because of those issues, our course is scheduled. Our course is designed in such a way that to take up this course, this topic from the theoretical and conceptual point of view. But there are people who can develop on these topics by undertaking further studies or by joining separate course for JVA PRA. In fact, SAP itself is conducting JVA PRA courses separately, but they need to have accounting background. Okay, people who are, any of you are having accounting background? Okay, so any of you are having accounting background, they can build up on what we are teaching. Of course, what we are teaching is not the complete one for these three topics. That is how the course has been designed. So we will be able to cover only the basics. What is the settings need to be done? What is the concept and all those things. Just to give an idea, basically. So the idea of these three topics discussion as part of our course is just to understand. If somebody asks you in the interview, what is JVA, you should be able to answer that. What is PRA, you should be able to answer that. What is RLM, you should be able to answer that. That is the level we are teaching as part of this course. Okay, you should not be able to you should not blink at that point. So that is the level what we are doing as part of this course. And as far our course is concerned, we as you have seen, we have well covered all the other topics, exchanges, MAP, TD, HPM and all those things. It is more than sufficient if you concentrate on those topics. There itself so many openings are there, so you can manage. And even if you want to do these areas, do something without accounting background, neither you will be able to practice nor they will be able to consider you for the interview. Okay. So if you want to join JVA or PRA modules, either you should have the prior experience in this area or you should have accounting background with this knowledge. Okay, so that is the prerequisite. And considering all these factors and considering that overall demand for SAP ISIL is mostly in the downstream, we have given less weightage to these three topics. And what is our plan is, during these 3 days, discuss these three topics, the theory and conceptual portions, so that you will be able to answer the basic questions of these three areas. So that is the purpose. And we are not planning to do too much of practice in SAP for these three topics. Okay. This I will start with today. Today we will see what is JVA and PRA concept, and next session for this one, JVA PRA, we will see what are the basic settings needed. Okay. We will not be able to run through the cycle because of we are not from the accounting background, how to post the GL accounts and all, but we will be able to check up what is the basic settings needed. And the last class for RLM, PRA, JVA, we will be discussing what is RLM. That will be only theory part. That is the plan. So today we will start off with the JVA PRA theory. Hope all of you are recording. If not, please start recording. So this is the starting point for crude oil exploration. You remember this initial slides what we discussed, how the crude oil is being explored. Suppose all of you are understanding this picture. Suppose Husky Oil, as Prasanth told, want to do exploration, what it will do? It will initially conduct some seismic studies, then do some exploration. What is the result of seismic studies? What is the objective of seismic studies? The objective of seismic studies is to find out whether there is any likelihood of oil in the below the surface of the earth. And if there is some likelihood, then we do some random exploration in that particular geography. What is the objective of exploration? To find out whether there is any oil there. If it is there, what is the likely quantity and quantity? Okay. And if we get a result for exploration, if we see that there is a huge oil below the surface of the earth, then we go for commercial production. The result of commercial production is crude oil gathering. And along with the crude oil, if we get some natural gas, we store that one also. So this is the process shown in this picture. So this is clear? Yep. This crude oil only, later we are giving to refinery and then doing all those things. Okay. At the bottom it is written high risk, high return. So what is your understanding on this? What do you understand by high risk, high return based on this process? Generally, what is high risk, high return means, otherwise? Shailendra, any answer?
Yeah, I mean, when you explore to search for oil, there is a minimalistic probability that you'll strike oil. So there is a huge risk factor involved in undergoing the exploration and everything. But in case you are lucky and you happen to find an oil well, then the returns are exponential.
Right, you are right. So this is a high risk, high return business. Means the probability of getting oil under exploration is very less. Suppose you keep on exploring at maybe 1000 square kilometer area. Maybe in one place you may get the crude oil. Balance all the other places, whatever expense you spend, it is all wasteful expenditure. But the green side is, even if you get the crude oil at one place, your returns are very huge. Because crude oil is a commodity which is on demand always. Maybe the price may go up or come down, but it is on demand. The entire world needs crude oil for its energy requirements. Okay. So it is very on demand commodity. Suppose Husky Energy or Shell, they go ahead and do the exploration at a $1,000 million budget. What happens if they get the crude oil? They become rich. They don't get the crude oil, they are losing the $1,000 million at one go. That is the problem with this business model. That's why it's called high risk, high return. Okay. So, oil companies is likely to incur loss because probability of not getting crude oil is more than probability of getting crude oil. That is the simple mathematics. If you go and drill at one place, say location X, you may not get the crude oil. That is the first premise. Second premise is, you are likely to get crude oil maybe if you further explore. Okay. So that is why this is a high risk, high return business. To avoid this high risk, people want to avoid risk, including you and me. Okay. Or minimize at least. Okay. To minimize the risk. Oil companies also want to minimize this risk. So what they do? They join together and do the exploration. So I will take the case of two companies, Husky Energy, Shell Oil. Now, if they want to do some exploration, what they will do? Suppose Shell has identified the shale location X for some crude oil. The budget of 600 million US dollar. Now, if it doesn't want to take that risk, so what it will do? It will talk to Husky Energy and other like-minded companies, maybe BP, Chevron and all. So it will talk to all the oil companies, ask them if they want to join with it along in the venture. Somebody agrees, for example, Husky Energy agrees. Then what they will do? They will float a joint venture company. For this purpose. And each of them will invest US dollar 300 million. Husky and Shell Energy. Now, if they don't get the crude oil, see the benefit, their loss is limited to just 300 million rather than 600 million. In case they are able to find out one more partner, maybe each of them put 200 million, the loss is limited to just 200 million. So this way they want to minimize the risk. So the floating a company, joint venture company, for this purpose, and accounting of that company. Finally, that joint venture company, owners are this Shell and Husky Energy. It is accountable for the company. How to make their accounting everything is called joint venture accounting. So that is the responsibility of basically the finance, controlling, and the JVA PRA consultants put together how to do that. So our objective is not to go into the accounting part, and we are not intending to go also. And so we will go ahead with the theory or the conceptual portion to answer some simple questions on JVA. So this is called joint venture accounting. Especially the expenses and suppose today this joint venture company incurs some expense of say 10 million on buying some item. Finally, this money comes from the owner's right. They need to know where this expense has gone. So all those accounting need to be completed. So that is called joint venture accounting. Okay. Basically, the expenses need to be apportioned with the owners. That is the main activity of joint venture accounting. Is it clear what is JVA now? Smita, Prasant,
Yeah.
basically the expenses part of the joint venture company is being carried by joint venture accounting. That's why I told this will be taken care by finance and controlling and JVA professionals. Okay, I have got one more example for this. Suppose 600 billion USD is some exploration budget. 3 companies come together, BP, Shell, Chevron. Then if they want to float a new company, for this purpose, each of them will invest $200 million. Now, by going for this joint venture, each of them is loss is limited to 200 million, 200 billion in this case. How do they enter into joint venture? How the practical steps are happening? Now you take the same example. One company will take the lead role. Generally, the company which wants to start this exploration, initially that will take the lead role. That company will talk to the other companies. In fact, it will talk to all the available companies in the market. Their corporate department will talk to this corporate department. Now, suppose Shell is taking lead role in this. Shell will talk to BP and Chevron. After initial discussions, they will do something called Memorandum of Understanding. MOU it is called. You might, if you read financial journals regularly, you will come across these terms generally. MOU. You read Wall Street Journal, Economic Times, anything. Okay. That is the initial intent statement. That is not the final one. After the MOU signing, what they do? MOU signing is on paper. It is not a legal document. Then what they do? Each of them go to their legal department, give the MOU, make it as a legal document, agreement, and all 3 of them agree on the terms and conditions. Then they make a statement, this one called agreement, joint venture agreement. This is a legal document. This is a legal document. Based on this legal document, they create a new company. They invest the money. They create a separate bank accounting, everything for this joint venture. Based on this joint venture agreement, new company, they create they do take the registration certificate for the new company. They create a company. They appoint director for the company, board of governors for the company. Everything these people do based on this joint venture agreement. Okay. Then that company comes into existence. Once that company comes into the existence, in practice, in legal and physical, That time we can create that company as a company code in the SAP system. Till then we can't do anything. Till then all the activities happening are all in the background, behind the screen. Okay. Then the money they are putting, they will be putting 200 billion means 33.3%. Okay. And one of them will be a managing or operating partner. Obviously, three companies can't declare the terms to the executive director or the managing director of the new company. It is not needed also because these three companies are anyway partners. So one of them will take the managing role or lead role. For that it will make some charges, it will take some extra charges, but one of them will be the lead role. Generally the company which is putting more money, that will take the lead role. If you take the same 600 billion example, if you think that Shell is investing 300 billion and the balance 300 billion BP and Chevron investing, obviously Shell will take the lead role. Okay. Okay. Then Shell will take the lead role. It will take the control of that new company for getting the reports and all those things. And Shell is responsible to ensure that the new company is running in smoother way. Okay. Now the new company, whatever we go formed just now, the new company, it starts its operations. It incurs the expenses as part of exploration, and whatever the expenses it is incurring, it need to account on its own because that is a separate legal entity. Then it is accountable for these three owners. It need to apportion that these three owners because that new company money has come from these three people. So that is how practically this is working. The accounting part, doing that in the SAP is called JVA. Okay. Now it is clear, everything. I think now it is better now. What is the concept of JVA? Shailendra, it is okay?
Yeah, I'm good.
Okay. Any doubts, any issues so far? Any doubts? Before coming to that JVA concepts, same thing. Okay. Now you understood what is the concept of JVA. Any doubt on that? What is JVA? Everybody understands what is JVA, right? Okay. Next we will see what is PRA. PRA is just the other side of the coin. That's it. Okay. The name suggests itself is production revenue accounting. Now you are floating a joint venture company for doing exploration purpose of crude oil. What happens if it doesn't get the crude oil? We seen initially only it may get the crude oil or it may not get the crude oil. What happens if it doesn't get the crude oil? If the JVA doesn't get the crude oil, then at the end of the exploration period, the wells are written off and the scraps are disposed, and legally this JVA company is closed, and whatever is the pending amount is being transferred back to the owners. It's just a closure of company code, non-company. What happens if it gets the crude oil? If it gets the crude oil, the next work starts. Production revenue accounting. So once it gets the crude oil, the three partners need to decide what to do with the crude oil, right? Maybe they can take back the crude oil if they want. Or what they can do? They can sell the crude oil in the market and take the revenue. That is also possible. In case they decide to sell the crude oil and take the revenue, that will be handled by the production revenue accounting. This is called revenue side. The earlier JVA is on the expenses side. This is on the revenue side. Both are same. Both are similar JVA PRA. Both are two sides of same coin. One is doing the expenses. One is doing the revenue. One is in the beginning. One is in the end. So we are starting with the joint venture accounting. If at all, if they get the crude oil, then we are going ahead with the production revenue accounting. It's clear? What is PRA? This is also accounting, you see. Okay. So none of these things are the logistics perspective, neither PRA nor JVA. That's why we are limiting ourselves with the theory portion for these two topics. They are from the accounting side. What is PRA and JVA? The concept, it is clear so far at least. Prashant?
Yeah, I'm okay.
Okay. So we will see some terminologies. Before going to the terminologies, I hope you are all sure where it is. So if you go to HPRO, I am not going to show any settings now. Some settings I will show tomorrow. That also only basic settings. Just to show where it is. Here is the joint venture accounting. JVA is their separate note, and PRA. You come to easy access screen. Yeah, sorry. Production revenue accounting. Here in the production revenue accounting itself, you will see both JVA and PRA related settings and configurations from the easy access screen. Now I will tell you some more terminologies you will try to understand from the JVA and PRA perspective. Operating agreement. What is operating agreement? The JVA operating agreement is joint operating agreement. The JVA is a formal agreement that specifies the condition for a joint operation. This covers the interests of partners and their properties as well as overheads and penalties. We were discussing about joint venture agreement, right? Same thing is called the operating agreement or JVA from the SAP terminology. Whatever we discuss joint venture agreement, same thing is called operating agreement. Joint venture. What is a joint venture? This is an association of two or more partners formed to share a venture's risk, cost and revenues. Each partner share is proportional to their undivided interest in the venture. Okay. So this is what we have seen or explained in detail. Okay. Equity type. What is equity type? The JVA has different development stages, such as engineering, construction, production. Different partners participate at each stage. The JVA manages different stages by using equity type. And equity type explains a partner, particular association of partners. This definition may be related to time, case, or purpose and linked with a specific equity group. Once the joint venture company starts operation, we take our earlier example where Shell, BP, Chevron, 3 partners were there. Are they going to start the production from day one? No. They are going to do in phases. Maybe first they do the planning activities, design, drawing, everything. Second, they are trying to do the engineering activities, procuring the materials and all those things. Third, they are planning to do the commissioning activities. Fourth, they are planning to do the testing activities. Finally, they will start with the exploration activities. It is all, suppose today you are starting the new joint venture company. Generally, roughly it takes 1 year time to start the exploration. Day one, no company can start. Okay. Roughly, on an average, for a normal average exploration to start, 1 year time it takes to start exploration itself. Okay. During this 1 year time, several activities are happening. Now assume that today Shell, BP and Chevron, they all 3 joined and started a joint venture company for exploration at a particular location. Maybe after 6 months, Chevron feels that due to some reason it can't continue in this agreement. It wants to come back. It wants to break from the venture. It can break. There can be several circumstances, reasons for that. Okay. Now, when Chevron goes, either these 2 companies, Shell and BP, need to take its shares, or it can inject a new partner. Maybe a new partner like ExxonMobil or Husky Energy is invited. They are joining that. Now, during the process of joint venture, what we need to understand that the partners keep changing, liable to change. Now 1 year it takes to start the operation itself, maybe another 2 years it takes for the exploration. Even till the completion of exploration at any stage, at any time, the partners can withdraw from the project by giving a written notice as per the terms and conditions of the joint venture agreement which was signed earlier, originally. Okay. Now the partners, it's not that 3 partners join together, it's not that they will be there till the end of the joint venture period. At any time they can change. Even they can change at the time of production. Suppose we initially discussed Chevron drying. Maybe once they hit the oil, joint venture hits the oil, BP may change it. BP may tell that I don't want, I want to sell my shares to somebody else. That time it may sell that security at a profit, because rather than waiting for the production to commence, BP has invested 200 billion in this venture. Later ExxonMobil can tell that okay, now crude oil is there, I will buy your shares for 300 billion. It may sell it and go. That is also possible. Okay. How these partners like this are being handled? Okay. Which partner is when? In which stage? Okay. All those things are being handled by something called equity types in the JVA. That is the meaning of equity type. And the equity group is there. Equity type and equity group are linked. Equity group represents an association of venture partners and their interest. Okay. And equity group may consist of all or some of the venture partners. For simple reason, we have discussed the joint venture with just 2-3 partners. There are joint ventures, big joint ventures, which 10 to 15 partners are involved. At least 10 partners are involved. And out of these 10 partners, 2-3 partners may be one group. How they will be one group? If you observe the oil exploration business closely, few years back in near Russia, I think Kazakhstan, someplace, some exploration activities were started by that country, and it invited various countries to participate in that venture. That time from India, Government of India asked 2 companies to participate in that. One is Indian Oil Corporation, another one is ONGC, Oil and Natural Gas Corporation. Now these 2 companies are separate entities participating in the venture separately. So they will have their own equity types. But both of them are representing Government of India as far that venture is concerned. So they will be falling under a group, equity group called Indian Oil Companies as far that venture is concerned. So that is the minute difference between equity type and equity group. And in practical applications, practically if you observe, equity group is not used, very rarely used. But if at all if it is used, where it will be used, I told you. But equity type is used. Okay. So these terminologies are clear: operating agreement, joint venture, equity type, equity group, and all. Okay. Okay. It may be slightly confusing also if you are not from the accounting background. Do not worry about that, as long as you are able to grasp the basics, it is okay. Joint venture partner is the partner. This is a partner mentioned in JVA with an undivided interest in the venture. Here itself you see, you are seeing so many financial terminologies. Okay. One partner called operator or manager the operation. The remaining non-operating partner shares the expenses and revenue. Recovery and billing indicators. You assign a recovery indicator to a cost object to indicate whether or not expenses posted using the cost object are billable to JVA partners. You assign billable cost to the person to appropriate partners. Non-billable expenses are assigned to the operator. Billing indicators are assigned to the billable postings and identify the type of posting involved, including cash card and normal expenses. I will go one by one. You assign a recovery indicator to a cost object to indicate whether or not expenses posted using the cost object are billable to JVA partners or not. So let us see this line. How the costs are accounted? Not only this joint venture, any project. We are having some system called project management also, right? Yeah, project system, PS. How the costs are managed in this type of projects? Basically, WBS elements are cost are responsible for that. Okay. In SAP, we can create a WBS element or cost center. If some expenses incur, we are sent to the cost center. All those are accounting stuff. Okay. Now, this joint venture company also, during the course of its business, likely to incur some expenses. First, we need to decide whether that expenses where to go. Is it normal course of the business, or should be assigned to the owners? If not, all the owners should be assigned to the operating owner. We need to decide. How to decide that? To decide that, the guideline is your joint venture agreement or joint operating agreement. There, everything mentioned. If you are paying salary, whom to assign? If you are hiring some equipments for exploration purpose, what to do with the expenses? Okay. Generally, the capital expenses involved for the exploration purpose, it is assigned to the partners. All the other expenses is taken as part of capital or revenue expense as part of this joint venture company, and the rest miscellaneous expenses are assigned to the owner. or operating partner. Okay. So like this, some categories are there. Let us not go deep into that, but we can segregate, okay, based on joint venture agreement. And in that we decide, we means the person, the accounting person in the JVA company, he decide where to post that expense. Today I spent, say, $10 million salary to some employees. What to do with the expense? Who will bear the expense? Need to decide based on the joint operating agreement and post it appropriately. Either we post to the three partners equally, or we post to the owner, whatever it may be, as per this one. Okay. So deciding all this, we follow some indicators. They are all called recovery and billing indicators. Okay. So you assign billable cost to the appropriate partners. If something is billable to the partners, you assign to them. Otherwise, you assign to the operator, and then operator decides what to do with that. Okay. Billing indicators are assigned to the billable postings and identify the data posting, including cash call, normal expenses, everything. Okay. That is called recovery and billing indicators. Use the JVA specifies the relationship between partners, joint ventures, and the rules for cost calculation. Joint ventures, equity types, and equity groups are assigned to the JVA. Joint venture partners are assigned to equity groups. A joint venture can belong to only one JVA. However, multiple ventures can belong to the same JVA. One joint venture means joint venture company, I mean company code, can belong to only one JVA. And the reverse, one JVA can have multiple joint ventures. This is similar to your company code and sales organization relationship. One company code can have multiple sales organization, but one sales organization can belong to only one company code. Same thing applies between JVA and joint venture companies. One JVA can have multiple company codes and multiple joint venture companies, and one joint venture company can belong to only one JVA. Why only one JVA? Because that is the legal base on which this joint venture company has been created. So it can belong to only one particular JVA. Okay. Any doubts so far? It will be slightly confusing because of financial terminologies, but just go through a couple of times. Your idea of today's session is just to answer some basic interview questions on JVA PRA. So with this session and some more materials what we are giving, that should be sufficient for you. Now, with respect to the tax, who will pay the tax for this joint venture company? All the three companies are going to pay, or the joint venture company itself is going to pay, or the operator or managing partner of this joint venture is going to pay? Okay. Who will pay the tax? Based on that, we go some classification of the joint venture. First is operated, no tax. This is operated by the company managing SAP JVA, allows carried interest or net profit interest partner at suspense pricing. You cannot add a tax to this type of venture. Operated no type means the joint venture company, what we created newly, it is not going to pay the tax. The operator who is operating that, he is going to pay the tax on behalf of this SAP JVA company. So that is that operation. There is one more type, operated tax. It is simple, the counter of the above one. Operated by the company running JVA, neither CI, CPI partner nor suspense is allowed this type of venture. You can assign a tax code. That means this venture it can pay tax on its own. It's a legal entity, it can pay tax on its own. Non-operated venture. What is non-operated venture? company managing SAP holds a non-operated venture share. This is billed by the operator per share of its expenses. Now, we see earlier example, 3 companies starting a joint venture, Shell, BP and Chevron. In that, we decided that Shell will be the operating or managing partner. For other 2 companies, this will be a non-operated venture, right? So that is non-operated venture. From BP and Chevron's perspective, this will be non-operated venture. Company managing SAP holds non-operated venture share. This is billed by the operator for its share of venture expenses. Non-operated on-billing. Company running SAP JVA sells part of its non-operated share to its venture to third party. Company running SAP JVA distributes portion of billings to receipts from the venture operator to the partners in its non-operating share, in effect acting as an operator towards the third party partner. Okay. Now, take the same example, Shell, BP and I am taking one example so that you are not getting confused. Shell, BP and Chevron. Now BP invested 200 billion. Out of that, it can sell some 100 billion to some other company. Okay. So maybe to ExxonMobil. In that case, if BP is going to build the other company, non-operated on-billing, it will be on-billing. Okay. And the final one is corporate venture. What is corporate venture? Company running SAP JVA holds 100% interest. Only one default corporate venture and equity group exists in JVA company. Now, 2 ways SAP corporate venture can happen. Corporate venture means only one company, 100%. What is that? Now, SAP self starts a joint venture on its own with 100% this one. That is a corporate venture. But is there any reason why Shell will start separately? No reason. If it wants to start on its own exploration, maybe it can float a subsidiary company. Then how the corporate ventures happens? Corporate venture happens, how it happens is, same example you take what we discussed initially. Shell, BP, Chevron started the venture. We told normally the venture is 3 to 5 years. During the period, the other 2 partners sells their shares, their equity in this venture. Finally, maybe after 3rd year, only Shell is having all the shares. Then it will become 100% corporate venture as far as Shell is concerned. That's why the corporate ventures are coming into the picture. So don't worry if you are not understanding few of the financial terminologies. But the concept, if you are aware, that is okay. Day-to-day process in joint venture accounting, what are all the day-to-day process being done? Data entry. Every day as the expenses happens, the data need to be entered into the system. And then accounting. How to account that expenses. Periodic processes, cutback, month-end processing, JV billing. Cutback means you are apportioning the expenses to your owner's rate. That is called cutback. Month-end processing you all know. This JVA is integrated with financial accounting, controlling, material management, project system. 4 core modules of this one, and more with the finance and controlling. Okay. So this is the SAP PRA basics what I am having, and I will show you some links also from the net. Same thing you can also see, go and see them, so that you are able to get further basics into this. Okay, you can go and see that. And then okay, this is not there. Some problem. Okay, I will send all these links to you. You can go through. So with this is the theory portion or background portion for the SAP PRA and the JVA. And next session I will show some settings. Before one more thing pending from me is I will send these documents to you all. PRA JVA documents. I am trying to send it. Prashant, SH Smida, SH Smida, okay, silendrostop@gmail.com. Yes. And I am making subject as JVA PRA RLM. Yeah, I send the material to all of you. Please check your mail. If you are not received, let me know. I think with this we can stop the recording for today. Next we are going to see the Prashant's issue. Yeah. Prashant, did you receive the mail?
Let me check.
Yeah. Please check.
Yeah.
Others also can check up. Yeah. Okay. So now what I will do? I will log on to SAP. SAP I already logged on. Yeah, please tell me your problem, Prashant.
Okay. So Murugan, what I did was I used the exchange, the sales contract in the exchange agreement, and then I created.
One minute. I will show my screen.
Yeah.
Here you need to tell me. Okay. Yeah. And Smida and Shailendra, for you too, today's session theory portion is complete. If you want to stay here, you can stay in this call. If you want to leave, you can leave. And tomorrow same time we are having session. That is my point. Okay, go ahead, Prashant.
Okay. So can you go to transaction 03A3 exchange display
Okay.
and enter the number as 100 1077. Hit enter. So
Yeah.
here I created a sales contract, and if you click on purchase one, you have the purchase contract. Okay, copy the sales contract and go to so I think the number is so I'm going to go to yeah, so you can go to VA03 and enter the agreement as sorry, enter the sales order number as 1177. Murugan?
Yes, I am there.
Okay.
It's doing.
And then yeah, from this I created yeah, I created the document flow. Yeah, you go to the delivery, which I created as 307 7000 something 307, and I completed picking also. So go to delivery. Yeah, and click on change. Okay, and I clicked on post ghost issue, PGI here. Yeah, the picking is complete, fully picked. Yeah, so when I click here, I get an error message which is there in the mail. I don't know where the config is missing.
This is some HPM setting. Okay, what you have put here untouched, right? You created a new customer, 900031.
No, I use the same thing which we have been using in the class.
Now, in the class we are using CEST01-01, right? Not
Yeah,
right.
okay, this is a new one then. Yeah.
This is new. First I will see that setting, customer setting. This is 01 EX is there for our this one. So what you did for your this one, let us see.
Which is 9031.
Okay, 01.
Okay.
Yes, because I think it will come in the sales order itself. Relating this delivery. First I will save it. 308. See what is YH. Yeah. License requirements tab.
The company code is GI.
For 01, it is having only tax TA. Tax.
So we can try now. Adopting the sales order.
No, you can do it. You can type. It's in details option only it is there. Okay. Yes. create a contract order. We'll make it per 1000 liters. One 78. Delivery split. What is the delivery your? This one is different, shipping point for this customer.
No, it's the same. PSH one.
Yeah. Same rate.
Yeah.
Zero 09. Yes. I think the customer master only was the problem.
Okay.
Not done any changes to that OIH10 rate. It was trying to take 00 from, because in customer master you have not mentioned anything.
Okay.
I think because first the sales order you created, right, it was stored in the tables, I think. So that it was not doing initially. So customer master was the problem in your case. Okay. Yeah.
Okay. So okay. Can you delete that 308 delivery, Murugan? So
I
that
already deleted.
308
I
is
could create deleted.
So I used earlier 307, so that you deleted. Did you delete 308 as well?
Not 308, which I created one delivery what you created.
Yeah, so you will keep 309. You can delete 308. So now, Murugan,
308 is deleted or not yet?
no, not
Yes. Yes, deleted.
Okay, so now if I go to document flow for this order, or you created a new
I
order.
created a new order, right? Yeah. think.
So can you delete
Your
one
order
one?
was 1178.
No, my order was 1177.
1178 now.
That you can delete 1177 also.
See, good see has happened. Yeah.
Yeah. So can you delete 1177?
Let me see if there is anything pending in that. Nothing, only 1177 is there.
Okay, so now if you look at so Murugan, can you allow me to share my screen?
Yeah. I will log off.
No, you can keep the system in case if you want to go.
No need. Because it is only one user ID is there, right? Are you getting a separate user ID? No. You are using oil 2 only, right?
Yeah. No, but I just want to show in the PPT.
So both of us cannot do that.
Yeah. Okay. So now you share with us. So I'm trying to do the same thing here. Murugan?
Yes, I am there.
Okay. So here if you look at these 5 steps, so what I did was, so if you take the part 1 of it, so as you said in the last class, so you have Husky, Husky has a customer there, Canada, and but Suncor is shipping the goods to Husky, physical movement. Okay. So I finished this step. I have no problems with this. And the goods movement for Suncor's customer, who could be Costco, right?
Yes.
So we finished this process now,
Right.
right? So we created this delivery and post goes to issue and all. So now back to this screen. So now application, right?
Yeah, that's what I told. Reconciliation is a manual part.
And what's the P code for it? How do I do that?
No, that's what reconciliation is a manual part. Actually, what they will do is they will take out the reports. You see the reports are there in the exchanges. Okay. You go to, you are in the SAP? No. Okay, I will have it. Reconciliation is a manual step. It is not happening in SAP. Non-SAP step.
So they should be getting the report somewhere, right?
There is some standard reports, but standard reports are not used. But I will show where it is there.
Yeah. Okay. You are sharing your screen?
Yes. Reports here you see.
Yeah.
FD10, FK10, MC10, exchange balance, exchange goods movements, exchange entitlement, exchange transactions. These reports are there standard provided by the ISIL. But generally what they do is they create most projects I guess in custom reports only. Because each company has their own way of doing the reconciliation process. Okay. So they don't use it. If they want to use it, they take out these reports, download it to an Excel sheet, and you start using this.
Okay, so
and then this company will have, other company will be there, right? So both the companies, they will sit together for the company's representative, they will verify the reports, whether it is correct or not. Once the reports are verified, then the reconciliation is being completed.
Okay.
Who
So,
has to go to whom, what? Yeah.
okay, can we go to our example here? The exchange, can you put the exchange number?
That's what is your exchange number? 1179, huh?
No, 1077. Yeah.
This is your delivery document.
Yeah, that's the delivery document, and I think the second line, I think it's for the other side, right? When Husky did the shipment.
Yes.
When Sunco did the shipment.
Right.
Okay. Okay, got it. Yeah. Okay. So yeah, this what is this key code? What is this key code? O3AL.
O3AL. Yeah, O3AL. Yeah. O3AL.
Okay, and then Murugan, after this, I do the exchange settlement. What is settlement?
Settlement means then they decide, suppose now assume that this is only one transaction is there. Now you tell me who has to whom what. 1000 given by Shell to Husky, right? 1000 liters. 750 liters given back by Husky to Shell. That is the statement, right? Now 1000, another again, if we assume that they stop with this, another 250 need to be given back by the Husky to Shell, right?
Correct.
Company is concerned. How to settle that? That is called settlement. Either they can give back that 250 liters by way of product, or they can give back by way of money. Whichever they want to give, they can decide and do. For that, they will create something called a netting document. When they do that, if they create a movement also, then they create a movement. They just create a material document, post it. That okay, I need to check, but you can check it up here. Okay, where they do that here in this place, netting movements. Movements based netting means, I will show some example. I am showing one example, one for a simple case. Generally, it will happen frequently. Okay. From the exchange partner, from so. Okay. Receipt without the financials. This they are putting value. Okay. If you go to the material document or FI document, movement document 2000193, movement document. Yeah. See, 10,000 gallons they go moved. Okay.
So this
So when
is
they are moved,
this is product exchanges, right?
product. Okay. The other partner has given to this partner 10,000 liters individually, just to make a movement. You know this in MM there is a MIGO, right?
Yeah.
Movements. Okay. I am not aware what is the transaction, what is the, I think 101 they go used to movement, right? And they received that. Again that they created a netting document. Okay. Okay, this is completed. This transaction is complete. Same way they want to give money, finance. Okay. Here you see the amount being paid or received. I am not clear on the debit credit part on the logistic consultant, but this is where how they are settling on those things. They posted some document on the tweet typewriting document IP, all those things. We can see it here. Okay. So basically the netting either quantity or the money, either one they can pay. Accordingly, the FI people will create a document for that adjustment entries, everything.
Okay. And
That's
then,
how it will come in. Yeah.
okay. So and then,
Go ahead. Yeah.
and so here exchange settlement, so is basically netting.
Netting, right.
Okay,
You
and
see,
then-
I told na, Smita left now. Smita is not there. That's why I take it later. Yeah.
Yeah.
Only Sailendra and you are there. Yeah.
And the exchange closeout is you go back to your exchange document and click on close.
Yes. Yeah, Prashant, I am having one more call now. I think, can we continue our discussion next session?
Yeah. So what I will do is, Murugan, I will do the other two steps. I mean, basically netting I will do tomorrow, and then we can, if I have any issues, we can talk.
Yeah.
Huh?
Okay. We
So,
can talk.
so basically I have taken screenshots. So tomorrow I want to show you the whole thing, what I have done.
Sure, no problem. Sure.
Okay? Okay, thanks. See ya.
See you tomorrow.